I need to find a full loop of that. Welcome, everyone. This is Leon from dumbmoney.tv, where we help investors learn the art of social arb trading, finding an info edge, and formulating investing ideas. And with me today is my friend Mitt from Profit Makers, a community of option sellers, of which I'm a part of his premium group. And we'll be partnering up together to help others learn about options, how to replace one or expand one's income through options trading. What he's going to talk to you about today is how we can all take actionable ideas that we find through social arb and all the research and theses that we write up and all the various strategies and risk levels and implement them through various strategies through options trading. He's expanded my world greatly in my understanding of the flexibility and multitude of strategies and consistent income streams from the sell side of options. Like every week, like he just blows my mind with a new way to do something with an options trade on the sell side and managing trades, adjusting trades. And this is what he does full time. And he helps us so many others as well. So with that, I would like to introduce Mitt.
Hello, everyone. How's everyone doing today? Give me a thumbs up. Everyone okay? Good, good. Okay. So just a quick intro about myself here. My name is Mitt. Some people would probably tag me with a politician out there called Mitt Romney. Uh, Unfortunately, I don't hold any of his traits and qualities. So I'm just a pure options guy. So um, to begin with, I want to just go ahead and give a little bit of background on how I got myself into premium selling of options and the scalability of the options over the past few years. So I'll go ahead and begin with a little bit of intro there, and then we'll go ahead and dive deep in. So just to go ahead and begin, my story and my background when it comes to options was when I got introduced to a market maker back in 2007, 2005, 2006, and probably more prominently in 2000 and 2008. Um, a market maker actually is primarily in the business of selling premium. So at that point, I got myself exposed to how premium selling works. So that today, actually, if I would to kind of put clear definitions, is put across to you as naked puts and naked calls. So some of you all may have heard of what naked puts and calls are, and you may have heard on several occasions that those are the most riskiest investments out there. But I'm here to share the alternative to that, which is naked options can be risky if you want to make them risky. But if you do them right and you do them the right way, you will be able to go ahead and get more strategies out of those option contracts and all that. So I'll go over some of those strategies today and kind of walk you through a few of those. The other aspect of this is I'm a big fan of dumb money. And what I've noticed with dumb money is that there's several social arb strategies that have come along the way in the past few months and years. Chris has done a wonderful job, and we've kind of seen all this evolution in social art. The challenge that everyone here has, and what I've seen, is when you come up with those social arb strategies. Um, People tend to get fearful, anxious, or they go in and take a heavy risk position. So they're still trying to navigate themselves on the strategy aspect. Because when you see a social arb opportunity, you either want to consider just buying a call or buying 100 shares of that stock, or buying X number of shares of that stock. That's the first thing that comes in most people's minds. Now the ultimate question is that your risk profile, right? That's the fundamental question you need to ask yourself is, what is your risk profile? Do you want to go all in? Do you want to just kind of make a fixed gain over a certain period of time? Do you want to take a 50-50 coin flip shot? You have a choice here. You can choose what type of trade you want to get in with your direction. I don't know if you all are aware, but when you're hitting your basketballs on the ring, right? You have a three-pointer shot, you have a six-pointer shot, you have different shots, right? You get to shoot, you get to decide where you want to shoot from. That's the whole idea. Where do you want to shoot from? Do you want to shoot from the three-pointer? Do you want to shoot from the six-pointer? So that's what I'm here to discuss with you, that within social art and strategies that are put out there, you have a choice on what trade you want to go into under the same underlying stock, whether it's Peloton, whether it's Neo, whether it's Lee. There's several stocks out there, making its trajectory upwards. So how do you want to ride it is your choice. So that's why I'm here to kind of dive in and share a little bit about that. Okay. Uh, so I'll go ahead and first and foremost uh, go ahead and bring up the risk disclaimer. And just to kind of summarize the risk disclaimer today with you is that I'm here to educate you, not to give you exact strategies or give you a directional trade and advise you on a specific trade that you are going to go into. I'm here to kind of cookie cutter and put a cookie, gingerbread cookie, or chocolate chip cookie out for you and say, do you want to eat it or do you want to leave it? It's your choice. So I'm here to just kind of go through step by step what choices you have. So I'm going to be going and diving into different trades with examples. I'll tell you one other interesting point that I want to put across. There are several words floating around when it comes to options. Delta, gamma, theta, vega, rho. You have all these Greeks working in different directions. What I have done here is simplified the Greeks. Greeks are very difficult to understand. For some people can digest it, some people struggle through it, and some people are experts because they have enjoyed their statistical classes. So they have actually gone to done statistics, and they've been able to enjoy how to manipulate and work with the Greeks. So I can scale from down below all the way to the advanced level with you all and let you understand the Greeks in different concepts so that you can kind of digest it and make good judgment calls around the Greeks. Okay, so let me go ahead and go over the agenda today. Okay, why selling premium? Okay, I'm going to go cover that with you. Why selling premium is crucial. We're going to go over two advanced strategies, credit spreads and the poor man's covered call. We're going to cover and touch few points, which is the power of adjustments. Okay, that is very crucial when it comes to premium selling, when it comes to any kind of options trading, because you have the power to adjust your trade In a stock, it's very difficult to adjust your trade. In options, we have the ability to adjust it and de-risk ourselves. We're going to go over a few examples: TAN, NEO, Tesla, like different strategies we could play out, and Q&A. So I'll try to stay on here. If people have specific questions, they're welcome to come and ask here. I'll go ahead and answer that and go over those step by step. Okay. Now, just before I begin, I wanted to just share what we do in our community. I'd just like to share that we're a small community. We started off in Dallas, Texas, and it's a premium profit makers membership. We have been operating out of WhatsApp groups. We just made our headwinds to Discord to go ahead and align with a huge community out there in the Discord environment. So until now, we have been operating under the WhatsApp, which is kind of a legacy model. Now we're going to be able to automate stuff in terms of our, insights and all that within Discord. So that is one aspect that I wanted to share. So you're welcome to join our Discord community. I want to thank Leon for empowering me with the Discord community, because without him, I wouldn't have made it to Discord. I keep my focus on options only when it comes to that. So what do we do in the premium membership? Okay, I'm just going to hit the ground on that really fast so that you're aware what we do in the premium membership. We do premium selling, which is naked puts and calls out of the money, not in the money, out of the money. Okay. Now, here's why we believe this channel works. Premium selling is because we have gone ahead and done a back test on our strategies. We go back 11 years, 13 years, and back test our strategies. And guess what? We were able to prove that we have a 98% batting average, which is tremendous. Okay. And even today, we still hold the 98% batting average. How do we do it? Okay. It's no secret sauce. We go out of the money. We go at least one standard deviation out, for those who understand what that is. For those that don't understand, it is like taking, I'll give you an example. It's like taking an Apple stock that's trading at $115. We're selling a put at probably like about $80, $85. And what that means is we're betting that Apple will stay above $80 and $85. And if it does stay above that, we make an X percentage fixed income. That's it. X percentage fixed income. Now, how do we derive our trades? Okay. We keep a very close watch on institutional trades, heavy volume trades, unusual activity. We do all sorts of at least technical analysis. So that increases our batting average. Let me put it this way. If someone were to go ahead and buy a call on Tesla and bet their way up, and I see at least $5 million worth of orders coming in, what I will do first is go ahead and sell a put way out of the money and collect a premium, a fixed income premium. Just in case they're wrong, guess what? My odds are better. Why are they better? Because they're betting that they're bullish. But what if it turned and failed? Guess what? You have a fixed income to collect. Obviously, there is a risk associated. What happens if it goes below that price? Well, you get to buy the stocks at a discount. What if you don't want to buy the stocks at a discount? You can push the can forward. You can choose to own the shares at a lower price. That is called rolling. Okay. So we do those strategies in the premium selling group with a 98% batting average, which is amazing. And the ones that we lose, we go ahead and adjust. The power of adjustments. We adjust it and bring it back to profitability. Okay. Jellyfish. Okay. That comes from a friendly member in the premium premium membership group. She chose, and we have a diverse group of people in our premium membership group. Is She named the group Jellyfish, and the idea here with Jellyfish is, if we're seeing bullish activity in Neo, or we're seeing bullish activity in Peloton, we try to find the right delta, the right gamma, the right vega. We try to find all the Greeks and find an optimal trade that we can go bullish on. And guess what? That's a win all or lose your contract price. Some of y'all already know it's just simple buying calls and puts. But what are we doing? We're optimizing our trade by selecting a trade that will give us a good ROI into the future. That is the Jellyfish Group. Into the future is an interesting it's an interesting group that we set up more recently, and we're kind of building a portfolio model into the future. The idea of into the future is very simple. We buy a deep in the money call on long term investment opportunities, deep in the money call. How do we do that? We go out to some of the furthest expiry dates. We select a deep in the money. Why deep in the money? Guess what? A deep in the money call behaves very closely to a stock. Very closely. It has close to a delta of 1. It's 97, 98, 99. It has a delta of 1. For every dollar the stock goes up, you make close to a dollar. For every dollar the stock goes down, you lose maybe 90 cents, 80 cents, 70 cents, 60 cents on the dollar. Okay? If anyone is looking to buy 100 shares of any stock, any liquid stock that is liquidly traded in the market, 100 shares, okay, for a long term position, we're talking about 2 to 3 years out, they can lower their investment by up to 50% and have a better risk reward than a stock. The stock pays you a dollar for dollar, it goes up. You lose a dollar for dollar, it goes down. So guess what? In a deep in the money call, you get to build a strategy where you don't lose a dollar for dollar as it goes down. Whenever I met with people on one, they have totally transformed their portfolios from owning thousands of shares of stock to buying deep in the money calls. Everyone will ask, well, it's got an expiration date 3 years out. Guess what? 3 years out, 2 years out. Roll that call out into the future. Get another contract into the future. Replace it. It's not going to harm you, right? So when people are thinking long term, they limit themselves to thinking that this has an expiration date 3 years from now. Well, guess what? It's technically not an expiration date for you if you're going to roll it out 2 years from now. So it's no big deal. So that is the strategy we build on into the future. Now, guess what we do on top of that? Okay. I don't know if you all have heard, there's something called straddles in premium selling. Okay. Selling calls and puts out of the money. Okay. And I like to do at least one standard deviation out, more than one standard deviation out. Guess what that does to your into the future trades? It lowers your cost basis. Lowers your cost basis. I have several examples of where my deep in the money call became free of cost. Free. I'm not kidding. Free. Because I kept doing straddles against it, rolling both sides like a ninja, going this side, moving it out, going this side, moving it out, moving it in, depending on how the price is moving. And guess what it's doing? It's lowering your cost basis for your deep in the money call. Guess what that does? Guess, makes your cost for the contract go down tremendously, tremendously, because you're making money from another source to pay for your contract. And that is an amazing model to have in your portfolio and under your belt. Okay. Rising stars. And I think that is very important is folks are learning here. Okay. Folks are learning. I'm going to tell you flat out, you can read books day in, day out. You're not going to learn any better than just practically trying out trades, testing them, watching them over time, and getting feedback on them, right? So we have a Rising Stars channel where people post their trades and they get feedback on it. And they go ahead and put their adjustment strategies out and get their feedback on it. Is this adjustment making sense? Is it not making sense? So that's the whole idea. You learn by example, you learn by doing. So that's one of the best ways to learn is at least practically trying out. You know, one thing I've noticed between several other premium seller instructors out there and newsletters out there, it is always a one-way street. You're given an indicator, okay, do this, do that, do this. Well, here, what we're trying to do is coach people to build that skill themselves and get that two-way feedback rolling among our community. You know, people share what they want to what they want to do. We go ahead and do a little bit of research. We go ahead and say, okay, if you did this delta, you have more risk on this side. Your probability of profit is 80%, 60%, 90%. So you get to pick and choose and vet things out with the community. Okay. And last but not the least, okay, what we do in this community is we meet every Saturday at 1 p.m. We go over all my open positions in the premium selling strategy, which has a 98% win rate. We go over that on Saturdays on and go ahead and share how I'm going to adjust those strategies if they breach. Okay. So I go over that on Saturdays. And then what we also do is occasionally throughout the week after market, we get on coffee breaks on rare occasions. People hop on. We go ahead and discuss about market events and how it could impact our positions. So we kind of at least bring that over time. And sometimes we get into interesting political discussions as well. So it's kind of like an open community, kind of trying, everyone's trying to brainstorm, okay, what if this happened or what if that happened? But guess what? You know, we try to remove the bias out of the equation. I like to keep an open mind when I'm trading, that anything that goes up can come down, anything that goes down can come up. So you have to make sure that you have your power of adjustments working for you. The best analogy I've used with my team members here is a ping pong table. Okay. Is when you understand the power of adjustments, you are actually the person that is going from one end of the ping pong table and catching the ball on the other side of the ping pong table. That's what the power of adjustments is. Once you become that ninja to go ahead and go back and forth through the tables, you have mastered it. You have mastered it. Okay. That's what I had in terms of offering the Profit Makers premium membership. We're charging $100. 50 goes towards feeding homeless in Dallas. We see that that's the best thing to do here in our community right now. After COVID, we've seen people, strolling in lines here in the shelters in downtown Dallas. So it's kind of surprising that whatever we donate is still not enough, because we see lines after we're out of food. So that's been one of my biggest passions in this environment is I make my money for options, and whatever I'm doing here, I want to make sure it's serving the community as well. Okay, so that's what I have for in terms of offering this to you. And guess what? Okay, for Dumb Money members that have joined today, okay, we have on rare occasions, and actually more occasions, um, if some of you all have heard of Tastyworks. Tastyworks is a platform where you can do options trading. uh, I personally advocate that platform for beginners. Okay, those who already know options, they move on to other platforms. But those who are still learning, I advocate that because that has the best visual tools. In my opinion, Robinhood doesn't have it. It does not. Okay, I've got to be flat out. You are going to go ahead and pull your hair, teeth, trying to figure out how to understand the Greeks in that small screen that is just telling you the Greeks on the bottom, and you don't have any visual sense of it. So, in my opinion, Tastyworks is the best platform to learn, and most of the students in the premium membership group are using Tastyworks. So, we use that for our platform. Guess what? The Tastyworks CEO, Tom Sosnoff. He was one of the market makers at CBOE. He's the one that partnered with several folks and built Thinkorswim, which is now operated under TD Ameritrade. He's the one that left Thinkorswim, TD Ameritrade, and he built Tastyworks. He's building this platform for the future products out there. Okay, not for the products that have already been in fruition in the past. So this is his venture. He's my guru. He's taught me. He's been on our Saturday sessions in person. He's got wealth of knowledge. He's been in our group on Saturday at 1 p.m. sitting with us and talking to our small group of members on different insights. In June, he came and made a brief statement about his political opinion on the elections and how it will impact the stock market. We still have that recording, and we'll be able to share once you join our Discord channel. What we have happening this Saturday at 1 p.m., this session will not be recorded because Dr. Data himself has said he will be sharing data insights about premium selling. And because he'll be sharing insights, he does not want this session recorded. So I'm just going to offer it to everyone here, whether they join the premium membership or not. We're not here to make money out of people. So just feel free to go ahead and join this session. You'll learn quite a bit out of it. And it is free for all Dumb Money members. You can just hop on the same Zoom link you have joined today, and you'll be able to listen to him talk about few data strategies that have come under the belt. He's the head of data science for Tastyworks, and he runs a network at Tasty Trade. So he'll be with us on Saturday. Okay, that's all I had to share in terms of these announcements. Let's go ahead and dive into some of the results. Okay, we like to keep things simple, so we track things in something called Google Sheets. Okay, and it can be substantiated with our Tastyworks account. The reason we do Google Sheets is so that we can share it with the community. Hundreds of people can see this Google Sheets once they're a member. Okay, these are all of our positions we have sold premium on, and this is our investment, and this is the returns that we've had on every single one of these trades. So if I were to go down, okay, we have an annualized return of 42.77 on this. Let me be frank with y'all, okay? I don't want you to compare this with buying calls and buying stocks that are rallying up like a what do you call thundercloud, or going up. Neo's like skyrocketing now, and all that. So I have a portfolio for that. Okay, that can make tons of money over there. What I'm trying to share here is this is a consistent income strategy. Okay, where that 98% of your trades are going to be profitable. Okay, so in my humble opinion, I personally think you should be diversifying your portfolios. Okay, you should be allocating some into definitely those very thundercloud trades out there. And you should be also doing this because this is consistent income. You want consistent income. When you retire or when you get to a certain point in your life, you don't want to take your chances that maybe 2 out of 20 trades are going to make it, or 3 out of 10 trades are going to make it. You want something that's generating consistent income, right? So we pretty much sell puts, sell calls on this. Keep it simple. Out of the money, we use unusual activity to guide us. We use dark pools to guide us. We use technicals to guide us. And we when we see large prints like almost $5 million order, like buying calls of $5 million order, selling premium on this gives you a nice whopping 10 to 20% return with a lower risk profile than the person that's buying a call. Guess what? That's what I did with Peloton. When I saw Chris buying into Peloton, I took a humble strategy on that. I sold a put at $85. If it stayed above $85, I made 27% return. 27% return if Peloton stayed above 85 bucks. Everyone will be like, wow, how can you just make 27 being above 85? Or some people will think, oh, that's pretty dumb. You could have made 50% or 70%. Yeah. What I'm trying to share, you have a choice. You can do what you feel like. You can either do the low risk strategy, you can do the high risk strategy, you can do the binary risk strategy, make or lose, right? We can do all sorts of flavor. Think of this long rod. You can kind of scale where you want to be. You have a choice where you want to be. Do you want to be on a risk? Do you want to take medium risk? Do you want to take, mild risk? So just sharing with you this little tracker. This is live for all the members. This is open trades, all our open trades that we have right now going on. Anything in orange is adjustments, how we're adjusting our trades, okay? And then closed trades is all the trades that we have made profits on, right? The more green, the merrier. So most of them are green. Occasionally we'll have a red because nothing in life is perfect, okay? Let's accept the fact, okay? I'm not going to tell you that everything I've done is positive, but you occasionally have red because the trades didn't go well, right? But most of them are green. You have few that lost money, but at the end of the day, you want to have a consistent income. So that's what this is. So this is the core model of our strategy. And then we have all these into the future jellyfish that we do to try to optimize different ARB techniques that we are seeing out there. I'm impressed with Dumb Money, done an amazing job of trying to find those momentum trades before the crowd just jumps into it. Like it's just amazing to see those run-ups and those call-outs when they happen. So we go ahead and take that and we can build our own strategy around it. Okay, so that's the results. Let me go into a live example of Neo. Okay, I'm going to dive into Neo. Okay, what I did on Neo is I bought a January 15th 25 call. Okay, and I would say the architect of Neo is Leon. He kind of at least told me, at the end of the day, Bullish or bearish? That's all I need to know. And how bullish or bearish? You think it's like a big runner, low runner, medium runner? You know, you kind of have to create a little judgment in your head how big of a runner you think is going to be, right?
Hey,
So
Mitch,
guess what?
do you zoom in a little bit on Tastyworks?
Zoom in. Okay. Yeah, sure. Let me go ahead and zoom in. Okay. I hope that's okay. Okay.
Yeah, that's
So what I did is I bought a January 15 25 call. Okay. You buy a 25 call. Obviously, we all know this stock is running up like crazy. Past few days and past few weeks, it's just been shooting up, 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 up. Okay. Most people will be like, oh, I just want to own this 25 call and I'm satisfied. Do you know what the $1 million question is? Can anyone answer? Where is Neo going to run up to? 100 bucks? 200 bucks? Do we know where it's going to run up to? The biggest challenge anyone has here is exit strategy. It is very tough to exit, trust me. You're going to hold on to it, and then you wait until maybe it comes back down and be like, okay, you know what, let me bail out of it before it runs back down. Let me secure my profits. Like, all these emotions are running in your head, right? Guess what premium selling lets me do? It kicks the emotion out. I created a sell call against it at 43, collecting $900, which makes my breaking even on this contract $52. Okay. If, and it's not hypothetical, if Neo goes up to $52, guess what? If Neo goes up to $52, this contract will be paying me a ton of money. And this contract will go ahead and hedge my risk here. If this Neo goes down, okay, if Neo goes down, guess what happens? Guess what happens? This contract will pay me up to $907. So guess what I'm doing in this strategy? I'm protecting my profits. I've accumulated profits. Let me protect it. This is not the only way you can protect your profits, okay? You can buy insurance. You can buy a put contract, right? You can go ahead and take Neo, for example, and go ahead and buy, you can go ahead and buy maybe a December 18th, um, let's see, expected move is 34. So you can buy a 33 put for 200 bucks. Guess what buying a put does to you? It buys insurance. If Neo happens to go down, you have invested $200 to protect almost thousands of money you have already collected so far, right? So you kind of have to make a judgment call at that point, is what strategy do you want to use? Okay. Let me go ahead and give Leon, tell me, give me a stock name. I'm going to do a vertical. Actually, let's do a vertical on Tesla, right?
yeah. Tesla's a big one.
Tesla is a big one. Okay. So, guys and gals, you've heard of verticals out there, or you haven't heard of verticals. You may have heard that there's something called credit verticals, put credit spreads, call credit spreads. Okay. Put credit spread, put credit spreads, you have a bullish bias. Call credit spreads, you have a bearish bias. Okay. Very clear. Okay. So let's go ahead and put a demo example of a put credit spread for everyone. And I'm going to try to simplify it because a lot of people get complicated with all these calls and puts that you have to buy, right? So let's keep things simple, okay? Let's go ahead and pick a put credit spread for Tesla, okay? Okay. And let's go ahead, and Tesla is trading at 439, okay? $439. So we're going to pick just a random, let's go out to maybe a December contract, okay? Let's go ahead and pick a 400. It's 438. Okay. So, so first step in a put credit spread. The first step in a put credit spread is sell a put. Sell a put. What is the definition of sell a put? If it stays above $400, you make, in this case, you make somewhere between $19.30 and $20. Let's assume we'll collect $19.50, okay, per share, which is $1,950. You'll make $1,950 to sell a put at $400, okay? Now let's go to step number two here, or before we go to step number two, let's understand the risk reward here, right? If it stays above 400, I make 1950, goodbye. I made my money, walk away. And if it went below 400, what happens? You are forced to buy 100 shares of Tesla, which is $40,000. Okay. In a margin account, you want to say that it's about $20,000 investment in a margin. In a regular account, it is $40,000. Oh boy, I don't have $40,000 to put at risk. Okay. If I had $40,000, you know, I would have traded something else instead, right? So folks are like, okay, I can't do 40,000. What can I do differently, right? So let's go ahead and go down to 396 here and buy the put at 396, okay? And let me change this to delta here. But now, guess what is happening here? Okay, this is very interesting. You all know what happens when you buy a put, right? So think of it as independent trades, right? When you buy a put at 396, if it goes below 396, you're making money there, right? So guess what? There's a power, like a cancellation power. There's ninja happening on both sides, right? One is actually going up, one is going down. So it's trying to cancel each other out, right? So up until $396, you're going to lose. And then below $396, guess what happens? This contract takes over and starts making money for you while this one is losing. So it cancels each other out. So what does this mean? $400 minus $396 is how much? $4, right? We're dealing with 100 contracts. So that is $400. This trade right here we just put together is worth $400. Okay? It's a $400 trade. Think of a pie chart, $400, okay? Now, let's see how much we're collecting here. We're going to make $130 to lose $270. Okay, what does this mean? Okay, because of the cancellation power, you limited your capital to only $270, not $40,000. Okay, not $40,000 because you have the other hedge helping you as it's going down. So you have two trades canceling each other after a certain price, right? So 130 on $270 investment. Amazing. If you want to take the risk, you know you're getting in, the max you lose is 270. And if it goes below, you want to make sure you close the contract before expiry rather than holding it till the end because of risks associated with it. If you get assigned on one side and not get assigned on the other side, right? So you know what your max loss is, you know what your max profit is. And let's say Chris or Leon is bullish on Tesla. I can afford to buy Tesla and go bullish, like go buy like 40 shares of Tesla or buy 10 shares of Tesla. But guess what? I can bet to make $130 on $270 investment. Good odds, you know, you're almost making close to 30% return right there. So at the end of the day, you know, you just have to, and okay, I apologize, it's a 50% return. Where I'm going with this is you have options, you have choices, right? Now, What we do in the premium group is we teach you how to adjust this if it goes down. And what I mean by that, we did this on PayPal. It was actually last week when we did this on PayPal, where we were losing the position. It did the opposite of what we expected. Okay, guess what? We can go ahead and do ninja on it. We can put a call credit spread. We can close out one of the legs, which is the short call, which is the expensive one, let the other one ride. We have a lot of strategies out there. If you think you only know like two or three, they're almost like 15, 20 different ways of doing things in just a put credit spread or a call credit spread. Very simple. Okay. So this is one example of it. Okay. Poor man's covered call. Poor man's covered call. Okay. Guess what? Poor man's covered call is for folks who believe in the growth. Okay. But they don't think it's going to do a supernova tomorrow. Okay. You believe in a company, you want to invest over the long term. Okay. And you're like, hey guys, I believe in it, but I don't think this thing is going to make a home run tomorrow or day after tomorrow, right? We got to do something different here, right? So, how does the poor man's covered call strategy work? Okay, it's an industry standard. You can Google it, okay, and you'll find a lot of stuff around poor man's covered call. But the simple idea here is, and I'm going to use Neo as an example, right? Okay, I bought this 25 call right here, okay, and now I'm a little concerned that 4267 is pretty high up there. Okay. 4267 is pretty high up there. And this thing can probably now run very linearly. Okay. I'm just making this up. Okay. This is not what Neo is going to do. Okay. As far as I know, Neo is making up, it's trying to make a home run here. And Leon will get upset at me if I said this thing is going to slide down. But so if 25 call is going up and you're like kind of like, okay, I'm done with it, I just want to kind of just de-risk myself, right? You're going to go ahead and sell a call closer expiry date, sell a call closer. Okay, so instead of hold on. Let's click on Neo. So we have a January contract right here that expires January 15th. So I would go ahead and sell a call like maybe November, and the call will be out of the money, but I will sell it at probably let's say we're going to say that it won't go up to 55 by November. Okay. So guess what I did? Okay, I'm collecting $143 by selling a call that will expire in November if it doesn't go above 55. Okay. That is income you're generating. Income. How much does this trade cost? Nothing. Why does it cost nothing? Because you have a call that is protecting this trade. That is your insurance policy against you are. I don't know for those who are crypto users or for those who are into earning interest or dividends in dividend stock. This is like a close to a dividend model, right? You're getting paid a dividend if it stays below $55, and you can keep doing this if it doesn't keep moving up that fast at every occasion, and you keep collecting this income. I like to use this strategy on a company called AT&T. I've seen AT&T kind of hover around 26, 27, 29, 30, kind of, and pays dividends, right? But now guess what? You can buy a call there, you can buy the shares and sell calls against it to generate another income model for yourself, pretty much. So you can do these on any stocks, but I personally would say if you're doing it on a stock that is going up really fast, you'll feel bad as well because you you don't want to give up those run ups as well, right? So when that happens, you kind of like feel like, oh, I shouldn't have done that call. But guess what? Power of adjustments. Power of adjustments. You can roll that call out further in time at a different strike price and can say, okay, it can we can wait till maybe a month later. You're technically taking a loss on this trade, but the loss is being paid by another contract. The other contract is paying you for this contract. Okay, you're not technically taking you're taking technically taking a loss, but your loss is really actually paid by another contract. So it's an interesting machine that you're developing as you go around this. Okay, now last but not the least, okay, I wanted to answer a question someone put on the Discord channel at Dumb Money, right? Okay, let me go into it. See, can you guide me, Leon? Where was that question?
Yeah, I think it was an options trading discussion. Let's see.
Options trading discussion.
Yeah. Yeah. Just scroll up a little bit.
Scroll up.
And oh
This is
no.
the scroll. Okay,
No. Yeah. Right
right
there. Yeah.
there.
Right there.
Okay,
So a little bit up in here.
and I responded there. I'll definitely try to answer.
Right
Okay,
there.
okay. So I'm going to read this question. Okay. Hey, can I get some info on deep in the money options? I have $20 Neo 52121 calls. Roll them up for a credit to 30 Neo 52121. So same expiration. I have read that options are that are deep in the money, as the more in the money, the lower the IV, can see less appreciation as we approach expiry date. Let's assume that NEO keeps going up by May 2021 and is on its way to $60 a share, hypothetically. Okay. As I approach May 2021, Theta will decay faster, but if NEO rises low down, that will be a sign of IV lowering down, right? But if I roll up my options now, say 40, the IV right now might be high, that I may overpay for those $40 and really cut on my gains here. Okay. Let me go ahead and it's a very technical question. Okay. Some folks here may not understand this question. Some folks will understand this question. So I'm going to try to simplify this. Okay. What this individual is trying to understand here is they have monetized a contract. They've made money. They want to roll it up and make more money out of that con. But they're fearing that it will start decaying in value. Okay. I can go into the technicality of why it is, and whoever this MLG3 is, feel free to reach with me in person. I'll go ahead and give you a little bit of details of the theta decay and delta impact, so you can understand better. I can do that for you. What I would say though, for those who are trying to understand what is a good contract to get into if they're trying to buy a call, right? Okay, is try to find a contract that is more than 45 days out. Guess what everyone will say? Those are very expensive contracts. Okay, let's say you want to go somewhere closer than 45 days. Your mind should tell you that you have to have a very strong bullish bias in the next few weeks on that stock. If you're going to a contract less than 45 days out, remember you have to have a very strong bullish bias in the next 2 weeks. If you do not have a bullish bias in the next 2 weeks, you're going to get burned, because theta decay is powerful in the last 45 days. It starts tapering down. Okay. Offset by volatility. Okay. Some folks will come and tell me, hey, man, you're wrong. It's not that. It didn't go down. Well, if earnings is coming closer, volatility will go up, so it won't decay as fast. So you kind of have to balance that thought process. You have two forces. You have volatility and theta working with you. When I read the question, you have to analyze both forces together. You can analyze one force at the same time. Both combined together will tell you a better probability of profit. Now, if you want me to give me my layman's approach on what you should ideally try to do, if you're very bullish on a contract, you want to try to get at the money contracts, and you want them to go in the money. That is really where the majority of the ROI juices are if you're buying calls. Okay, that's where the juice is. And if you're not sure this is going to make a home run in the next 2 days, 3 days, or a week, you want to make sure you're trading something 45 days and above, because guess what happens? You don't want to get impacted by decay. You can cut your losses faster, sooner, and not get impacted more, right? So that's buying calls. I'm not a good advocate of buying calls and puts, but I can definitely share the optimal ROI trades there. But I like to sell to those who gamble. I like to sell to those who gamble. I want to make my consistent return. I'll make it, and I let everyone else gamble and take their chances. I want to make sure my odds are in my favor and I'm making a consistent return. I'd recommend to everyone here, if anyone wants to try out the premium selling group, feel free to join. No obligation, no commitment, no contract. $100, 50 goes to charity. Feel free to join. We have Saturday meetups. We have coffee breaks on occasion. You're welcome to come on coffee break and bring a proposal to me and say, "Hey, man, I got this trade. Is this a good optimal trade? What should I do? How will I adjust this?" Come up with your scenarios. Guess what? We're a learning community. We evolve. We want to democratize investing. Okay, that's what we want to do here. We want everyone to learn. This is not complicated. This is not. Okay, it is easy. You want to put fancy words around it, delta, vega, theta, gamma, and do all that, you can do that. Or you can just learn it the simple way and understand it logically. Best way to learn, hands on. Try to practice trades. And what I mean by practice is, if you're concerned about your money, do it as a paper trade. Learn to do it as a practice trade. That's how we learn. I don't see value in just reading material on and on and on. You're not going to be able to understand it. You have to feel the markets, you have to feel the premiums and all that. That's all I had for today. Hop on our Discord channel. Feel free to ask questions there. I'm not charging for questions to be answered on there. You're welcome to just ask questions. You're welcome to join premium membership. We have a group growing, a community growing, and we look forward to educating more folks in this community. That's all I had, Leon. And I'm open for questions. I know we
Yeah.
timed it to 8 p.m., but I'm willing to sit here. If anyone had any specific questions, I can answer that. Go ahead.
Yeah, man. So there was a ton in the chat. So I
Yeah.
copied a bunch down. The first one is, what is your average yearly ROI on selling these?
42
guess
to
per
42,
year.
45%.
Okay. The next one is there a
And
quick?
let me extend that answer for you, Leon. Let me extend that answer for you. Okay. I want to extend that answer for you, that this is an amazing return for the strategy we have. Okay. Please don't go out and compare this. Oh, I buy calls and make 100% return, 200% return. It's a different strategy. You have to risk weight it. How much risk are you taking in this strategy to make 40%? How much risk are you taking in another strategy to make the 200, 300% return, right? You got to make sure you understand that psychology. Yeah, go ahead.
Yeah. Well, I was going to add to that
Yeah,
what you just said. Is like, yeah, with selling, it's like what you're trying to do is just get 10 to 20% per month on your positions, right, on the selling side.
yeah.
Yeah, like with buying
Like,
calls,
we
it's like,
have five members. We have five members that have declared, like, they're trading on 150K account. They're paying their mortgages, house mortgages, through this model in our group right now. So the idea is we want to at least build that consistent income philosophy in people's heads. So they're doing that today. Yeah.
So I'm going to jump to this question. What would it be wise to sell calls when the IV is high so you can collect higher premiums?
Yeah. So I always look for juicy moments, and high IV is amazing. So you want to go ahead and make sure you're looking at whether there's a put skew or a call skew on the underlying. If you, I don't know what stock they're referring to,
We could use
but
Neo. That Neo is
yeah, we
pretty
can use
volatile.
Neo. Yeah. So at the end of the day, if the IV is high, okay, if the IV is high, you want to go ahead and sell premiums, but you also have to make sure that you're going to get the maximum theta decay as well at the same time. So we have to optimize and find the right trade when the IV bloats up. Go find the right contract that will give you the right amount of theta decay to collect juicy premium. And I love when markets crash because you'll be surprised. I was selling puts on SPY at $200, 200, and we're collecting 30% return on that trade. It's
I
just
bought one of those.
amazing. Yeah. And people are like crying out there and scared to death the market's crashing. You're hitting the circuit breakers every day, kind of thing. And you're like, oh, sell put, premium, premium, premium. And people are buying those puts at that time. And I'm like, okay, I'll do a 200, I'll do a 180. Okay, keep, and I don't mind owning S&P 500, 180 or 200, right? Yep.
Um, Next question. This was asked a few times too. What is the minimum capital you recommend starting with for selling premium?
So the folks that joined the membership group that we have, they've started with 2K, 5K. Now, what I tell people, and I'm going to give a humble opinion here, very humble opinion. When you're starting with 2K, 5K, don't go aggressive. Do the small trades, not the heavy or the medium trades. Why do you do small trades? Because your capital is limited to 2,000 or 5,000. So don't like, if the margin is giving you a lot of money, don't use up all the margin. Okay, don't. That is terrible of you to do that. If you try to do that, it's not smart. Okay, do 2 3 trades, and guess what, the idea of satisfaction is important in selling premium. If you do 2 3 trades, you're already getting a whopping nice ROI. It's the greedy that keeps people doing like 5 6 trades and get their accounts bloated up. They don't even have the money to trade, right? So be careful and only do enough. And I have a catastrophic calculator. Again, and we have advocated this in our premium selling, is you need to know when you're selling premium, what is the value of your position if you got assigned. So you need to know what risk you're taking, how much out of the money you have, right? So we do that. And sometimes we do it on one-on-one. Someone brings up their profile on the screen. I say, look, you're heavy here. You need to make sure you can close out these positions to free up your capital, right? So the balancing of capital act is important too. So 2 to 5K is pretty decent.
How do you define a win, outperforming market, not losing money, or how long the win rate has been going on for? I guess
Okay.
just profit, right?
Yeah, no, this is a good question. Yeah. So the win rate, you have to build your strategy around. So let me share one insight that we have done. Okay, I do backtest studies on the markets. So I personally have got data. I have taken data. I bought data from the market and simulated premium selling 13 years back. 13 years back, right? So S&P 500, everyone knows that's SPY, SPX, right? So I sold a 16 delta call and 16 delta put, okay, which is one standard deviation on an average, and managed them at a certain percentage. I had a whopping 94% win rate with a drawdown, which means the max loss of no more than $970 over 11 years. Rotating this. I share those studies on our Saturday session so that you have insight. Guess what? Someone can just go in and set up that strategy consistently and make that money consistently over a long period of time. And it includes all the elections, all the recessions. It includes all of that in the 11, 13 years. I did not eliminate those years in the study. So I have that study recorded in my premium group. If you join it, I'll go ahead and give you access to that so that you can see that study in and out. But to directly answer this question, I shared we're making 42 to 44% annually. And I'd like to say everyone here should study the power of compounding. The power of compounding. 40% annualized each year, compounded, is a magic ball. Like it's a snowball. It's a big snowball. If you keep rotating that portfolio year over year over year. So the power of compounding will definitely tell you a better perspective of that.
Um, if you sell a covered call and it goes past the strike, can it be exercised early by the buyer? Also, how often do covered calls get exercised when they pass the strike price?
Yes. So on rare occasions, and I said one in 100 times, sometimes some some guy who thinks that they want to get exercised when they're out of the money, they get exercised. And on rare occasion, the illiquid stocks get exercised more than the liquid ones. So liquids have very low chances of getting exercised. Illiquid ones have more chances of getting exercised. So what happens in that scenario? Whoever asked that question, is your stocks get taken away even though you did not want it to go away, but you still collect the premium, so you're still good. Well, you'll be like, oh my god, I wish I kept the shares. Well, go buy another set of 100 shares at the same price. You're still a winner. You're back to the same position. So you're welcome to set that trade up again and set another call up again. You didn't lose anything other than you're just paying taxes and short-term, long-term gains on that particular trade. So that's kind of the simple perspective there. But if it crosses, okay, let me ask you this. If it crosses, the first question I will ask you, are you still bullish on this? You think this is going to go up, right? And if your gut says you want to keep this longer, roll the calls out, collect more premium to compensate for the loss you're getting on the call contract. So guess what? You will collect more juice, more premium out of that trade. Okay. Next one, Leon.
Yeah. Let's see here. Okay, so Tesla $400 put spread, the one you were talking about earlier.
Yeah.
If it ends up at $398, your buy put won't execute. So I guess there's concern of what happens and where if the
Yeah.
price ends
So
up
I,
between the
yeah,
spread.
I said something when I was sharing that trade. Close the trade before it expires if you have breached the strike price. Okay. I mentioned that when I was sharing that trade because you do not want to take the chances of one of the sides getting assigned and the other not getting assigned. When you're on the slippery slope of that between those two ranges, there's a huge chance of one getting assigned and one not getting assigned. Close the trade, please. Don't make the foolish mistake. Oh, I'll wait till Monday. This thing can run up over the weekend. No, 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 no. People have wiped out their accounts doing that. It is bad to do that. I'm sorry to say this. Just engrave it in your head, like, get a drill and put it inside your head that close the contract. Even if you're losing $100, it's worth losing 100 than waiting till next week.
Yeah, so we got and maybe you could do a demo of like if you click on one of your trades and like kind of like show, hey, you were going to close it, what that looks like on Tastyworks.
Oh yeah, yeah, sure.
And
Yeah,
there's a
and
few other.
by the way, Tastyworks is a very nice visual friendly tool because you can put your deltas, extrinsic value, intrinsic values, so you can see it over different strike prices, what the deltas are, what the what the thetas are. You see delta, theta, extrinsic, the theoretical price. You get to see the volume, the open interest. So I would say maybe another comparable tool to this is like probably like Thinkorswim or something, but Thinkorswim is for like engineers, the way they programmed it, and they bloated it with charts. Okay, like you're in the business of options, don't use charts there. Use charts in like tradingview.com or something, you know. Don't mix charts with this. You're going to start clogging the software or the firmware of the application. So let's go back to Tesla. Okay, so let's say we did the December. I'm just making that up again. Let's see. We did December, this and this, right? Okay. Okay, so you're going to send the order. Okay. Okay, and once you're in, it is going to get filled, and then you're going to be closing the order. So once you have that open, okay, and then let's say, do I have a vertical? I don't do verticals very often here. I'm just trying to figure out if there's a vertical here. No, this one's not a vertical. Okay, I don't have vertical, but what we can do is just click on these two contracts, close positions, and then just review and send the positions, pretty much. Close positions, and then just review, send, and then it will tell you your realized profit or loss, pretty much there. So it kind of tells you that. Pretty down and dirty kind of thing.
Yeah. So you can close sell positions early. You don't have to wait till it expire, or you can just wait till it expires and
yeah.
click.
And for those who are advanced users here, like in options, they already understands options in and out. Just letting you all know, we go into talking about Greeks and all that for advanced users that can understand statistics, probability, all that in and out. We do go into those discussions. For this conversation, I'm trying to keep it simple because we have a wide range of audience here who probably are trying to understand even what options are today. Yeah, go ahead.
Yeah. As one person is asking about the Google sheet you were sharing earlier.
What question?
Oh, he wanted to see it again, I guess.
Yeah, just ping me on the Discord. If you ping me on the Discord, we can have a session and I can review each and every trade with you. I can even show it to you in Tastyworks, like searching it on Tastyworks.
Yeah,
These
yeah.
are all supported by each trade. Are everyone in the community knows these trades because they have seen it, they've done it, they've felt it. So yeah, we can go through these line by line pretty much.
Yeah, and we can ask some more questions on the Discord link, which I did link above.
Yeah, and actually, you know, I think we can have like I know we have the premium section. Let's just create maybe one channel for people to ask questions there that are not premium members. I'll try to answer those questions there in Discord kind of thing, so that they can kind of get a feel of understanding, and they're welcome to become premium or not. That's their choice.
Yeah. And let's just take this last one right here. So can you quickly touch on hedging after a run up with covered calls, since there are a lot right now?
Yes. Okay. Hedging. Okay. Perfect. Good one. Okay. So I'm assuming based on what is being asked, right? I'm assuming that this individual owns stock and their call has already breached. So now their profit is capped, right? Is that what they're trying to say? They're like, okay, now they can't make the extra income while the stocks are going up because the call is limiting their income on the other side. I'm hoping that is kind of the question they have, right? And if that is the thing, there again, power of adjustments, power of adjustments. You approach the strike price, roll the call out, roll the call out. Don't keep it at the same strike price. Roll it out. What do you get out of rolling out the call? You buy time and you get to push the can forward. Now, let's say that you are extremely bullish on it take the loss on the call that you're selling. Let the stock run up. Okay, that's again a nice adjustment right there. Well, why are you kind of holding on to that call? It's emotions that is keeping you holding on to that call. If you feel that it's going to run up, just go ahead and close the call and let that ride go up, and experience that ride. um, I will never, if I have a stock that is a liquid stock, I will never do a covered call strategy. I will do a poor man's covered call because I have a better risk reward than a covered call strategy. So I'm just sharing that thought. But if you come onto the premium group, I will show you how to do the poor man's covered call, which gives you a better risk reward than a regular covered call strategy. Yeah.
Well, with that, folks, thanks for coming. I hope you guys got some taste because there's a lot. Trust me, there are hundreds of different strategies, but that's too much to stick in 1 hour.
Yeah.
That's why I kind of hoped you got an idea of what is possible with options. Like there's so many things you can do, like selling different ones, like the makeup for a different position over here.
Yeah.
But we don't want to overwhelm you guys, so
Yeah.
hopefully this entices you guys to try out Tastyworks because it's Robinhood's good if you're just on the buying side, just learning how to buy, right?
Do
But
you want to know a secret? A secret about, I'm just going to chime in here about Robinhood versus Tasty Trade, okay? I found this out of my group members that are part of the premium group. They were using Robinhood to do the same premium selling strategy as Tastyworks, okay? When you do Robinhood, it only, in most of these symbols, like you're trying to trade maybe SPY or whatever these tickers are, right? They will only let you sell premium at 5 penny increments. I don't know, some of you will notice that, right? It gives you only the ability to sell at 5 penny increments under contracts. In Tastyworks, they go down to the penny, okay? If Robinhood is free, okay, it's technically making its money in the bid ask spread. And here they're charging $1 and giving you all the way to the penny differential on the bid ask spread. And secondly, the dollar is actually 50 cents because you're actually closing it at no cost. So you're probably paying 50 cents. 50 cents on a large profit is chump change. So it's again your choice. You're welcome to do it in Robinhood, but most of the users here have experienced both. And they're like, okay, you know what? It's better to just pay and get some legit platform that actually works for you and will never actually disrupt your options ability, because this is on a high frequency platform. Robinhood can crash. So I'm not trying to criticize Robinhood. People can do it on Robinhood, but I have a preference of this one because you get insights all in one snapshot. You can see the full picture here. And obviously, I'm a big fan of the guy that made Thinkorswim, the TD Ameritrade retail options trading platform. And he's built this, his team has built this. So I'm a big fan of that.
well, yeah, I just want to remind everyone, November 7th at 1 p.m., we will be doing this again. Everyone can join. We're having Dr. Data from Tastyworks come. And do you know what he's going to cover, Amit? Or talk
Yeah,
about?
I told him to cover. Let me check my email because I'm trying to get more out of him, by the way, because he's the ultimatum. I'm telling you, he's got the sophisticated tools to see data behind the scenes that nobody else can. So my last email with him, he sent. They're going to cover. Let me tell you all here. Latest findings in research, consistent income research ideas, any indicators discovered to increase the probability of profit. Those are the three areas I'm probably going to see what he's going to cover on Saturday. So it'll be interesting. Yeah, and thanks to Tom Sosnoff, my guru here, he kind of got him into the our Saturday session. One thing I like about the Saturday session, it's interactive. I don't like that one-way communication. We want to talk to each other, right? So let's communicate with each other. Let's get to ask each other questions. Keep it more interactive. That's how we learn. You don't learn by just someone just throwing it down your throat kind of thing. So yeah.
Cool. Well, with that, thanks everyone for coming, and like we'll see you in the Discord in Dumb Money, and hopefully at that other call.
Yeah. Thanks to Dumb Money. Love it.
Yeah.
Keep rolling out those trades, guys. Keep rolling out those trades. I'll keep doing these premium selling trades here. And then,
Thanks all. Bye.
okay. Thanks.